Well, it's June 2022, the world feels chaotic and it's difficult to make sense of it all. So it's time to check in and see what's actually happening with the housing market both nationally and locally here in Spokane. My name's Phil Wells, I'm a real estate agent that likes to keep up to date with the market, and I want you to be as informed as possible too. In this video we're going to look at national pending home sales, we're going to look at mortgage rates as well as mortgage application rates. We'll also look at the Spokane market itself. We'll then move on to look at some real estate news that stood out to me recently, before trying to piece it all together at the end and try and summarize the market as we see it right now in June 2022. So let's get into it. Looking first at national pending home sales. Just a note on all of the figures throughout this video, they are the latest figures that are available, but there is often a lag when it comes to reporting these figures, particularly on the national level. So for example, these national pending home sales that we're going to look at are from April. And we look at pending home sales rather than closed sales because it actually takes a while to close a transaction. So closed sales in April would represent activity back from February and March time, whereas pending home sales in April give us the most up-to-date impression of what the market's doing. Contract signings declined 3.9% month over month in April 2022. Year-over-year contract signings declined 9.1%, which represents 11 consecutive months of year-over-year sales declines. Where I am in the western region, sales declined 4.3% in April, and they declined 10.5% from the prior year. Here's what the National Association of Realtors chief economist had to say. Pending contracts are telling as they better reflect the timelier impact of higher rates than do closings. The latest contract signings mark 6 months of consecutive month-over-month declines and are at the slowest pace in nearly a decade. With mortgage rates rising, this economist forecasts existing home sales to wane by 9% in 2022 and home price appreciation to moderate to 5% by year's end. The escalating mortgage rates have bumped up the cost of purchasing a home by more than 25% from a year ago, while steeper home prices are adding another 15% to that figure. In some cases, these higher rates increase mortgage payments by as much as $500 a month. Such price hikes are already a burden, but they become even more problematic to a family on a budget contending with rapid inflation, including surging fuel and food costs. The vast majority of homeowners are enjoying huge wealth gains and are not under financial stress with their home as a result of having locked in historically low rates or because they are not carrying a mortgage. However, in the present market, potential home buyers are challenged and thus may attempt to mitigate the rising cost of home ownership by opting for 5-year adjustable rate mortgages, or by widening their geographical search to a more affordable region. Home prices in the meantime appear in no danger of any meaningful decline. There is an ongoing housing shortage and properly listed homes are still selling swiftly, generally seeing a contract within a month. So continued support there for the theory that I've been citing for a while now that increased interest rates are not going to cause a downturn in home prices just yet. We still have really low inventory, which means that buyer demand is kept almost artificially high. If you are considering selling right now, just know that there are still some very serious buyers out there in the market, but you will need to price your home appropriately. I'm seeing homes stay on the market longer right now, and in my opinion, this is because people are still under the impression that we're in a raging hot market and that the market will bear any price that people throw at it, and that's just not the case anymore. As the cost of home ownership is up 25% according to that economist, then buyers are going to begin to be a little bit more price conscious, and we're going to start to see the end of things like bidding wars and appraisal gap provisions. But remember, you can still sell your home, and if you decide to sell your Spokane home, then please consider me as your listing agent. I can be extremely competitive in terms of commission rates, which keeps more of your equity in your pocket. I do want to pick up on one thing that economist said though. The vast majority of homeowners are enjoying huge wealth gains and are not under financial stress with their homes as a result of having locked in historically low interest rates. Are homeowners in these circumstances locked into their homes, unable to move without making a poor financial decision? Again, I have discussed this point in the past. I believe that a lot of people chose to refinance rather than move in the last couple of years in order to get further financially ahead. Could this have down the line impacts on inventory, or is it already having an impact on inventory? Who knows, but it's something to be aware of. Let's move on to look at mortgage rates. Obviously, most people buying a home are using a mortgage of some sort, so to keep an eye on mortgage rates gives us a really good idea of what buyer demand is likely to do. Mortgage rates are in the headlines almost every day, so it's important to actually do a deep dive and see what's really going on. Sticking with April for a second, mortgage rates at the start of April were at 4.88%, and by the end of April they were at 5.41%. So a pretty large jump there, which might go some way to explaining the poor performance we saw in April's pending home sales. The most recent rates that I could see have tracked broadly level since the end of April and are at 5.48%, which is a positive sign that maybe, just maybe, rates have peaked. Obviously, the Fed is promising more rate increases, but it's worth noting that mortgage rates have increased nearly 3% in the last few months, whereas the Fed rate has only increased 0.75%. This makes no logical sense unless, of course, the market is factoring in extra risk in the overall economy. With inflation still high, I do think the Fed will continue to raise rates until inflation is brought under control. But if inflation does begin to decline with the current 1% Fed funds rate, then maybe the Fed won't need to continue raising rates, and this will be seen by the market as an overall sign of stability, and those mortgage rates will begin to come down on their own. Obviously, the economy is a multifaceted thing, and inflation is only one aspect of it, but it does seem like inflation is the elephant in the room right now. So once that's under control, maybe the rest of the economy will follow, and maybe mortgage rates will begin to come down. So rates are holding steady from the massive spike we've seen since the start of 2022. At this point, it's important to remember that buying real estate is never a bad idea, and you're not stuck with that mortgage rate. You can explore adjustable rate mortgages, like the economist in the previous section mentioned. You can also stick with a fixed rate product in the anticipation that you will be able to refinance in the future at a lower rate. If you are willing to compete in this market, then you may find yourself encountering reduced competition, which will be a welcome break from the market that we've been seeing the last couple of years. It's also worth recalling what the economist mentioned in the previous section about pending home sales, that home prices don't look to be going anywhere anytime soon. In fact, they're expected to rise in 2022 by 5% overall. So if you're concerned that you're going to sign on the dotted line for your home and the market's going to tank and you're going to be underwater, then currently, as we see the market right now, there are no signs that that's going to happen. And I am practicing what I preach. I just closed a primary residence property, a sort of live-in flip type project, a property that needs some work. I got a mortgage rate far higher than I would have liked, but when mortgage rates have a 3 handle again, I will be refinancing to a 15-year product, and I'll let you know how I get on there. Staying with mortgages for a second and looking at mortgage application rates. After all, it doesn't matter what rates are if nobody's actually applying for a mortgage after all. This is a huge leading indicator for the overall housing market. So let's head over to the Mortgage Bankers Association, the MBA, and see what the experts have got to say. Weakness in both purchase and refinance applications pushed the market index down to its lowest level in 22 years. The 30-year fixed rate increased to 5.4% after 3 consecutive declines. While rates were still lower than they were 4 weeks ago, they remain high enough to still suppress refinance activity. Only government refinances saw a slight increase last week. Just for reference, that's things like the VA, the FHA, and the USDA type loans. The purchase market has suffered from persistently low housing inventory and the jump in mortgage rates over the past months. These worsening affordability challenges have been particularly hard on prospective first-time buyers. Affordability is becoming a major concern, and people are finding themselves having to downgrade their expectations and even look in less desirable areas than they otherwise would. But people are still buying homes. To sum up, I remain confident that increasing mortgage rates will not cause a downturn in home prices just yet. But it does feel like we're at an inflection point in the market where people are becoming more price conscious. And you need to consider that when and if you decide to list your home. If you're a buyer right now, it can still be pretty competitive for those most desirable homes in the best locations. Multiple bids are still common in that sort of scenario. But there are signs that overall competition is waning. You may still have to be aggressive, and because of the increased cost of buying a home, you may end up with less home than you initially envisaged. But you can still get on the housing ladder, you can still move up the housing ladder, and owning a home is still a great wealth building tool. Looking now at my local market, Spokane. These are May's actual sales figures. Actual sales were down 7% in May. Median home prices continue to move upwards rapidly, with median home prices steaming ahead at $450,000. So it's plain to see that demand is still strong here in Spokane. Otherwise, these double-digit year-over-year price appreciation figures would start dropping off and inventory would start to increase. Those most desirable homes are still flying off the market, while those homes that are either overpriced or just less desirable are languishing on the market a little bit more than we've seen before. Inventory is up to a 23-day supply, which is the highest I've seen in a while, and new listings are up, which is a positive sign overall. It's worth mentioning that a balanced market would look more like a 3 to 6 month supply, so that gives you some perspective and goes to show that we're not over the low inventory phenomenon just yet. The Spokane market continues to be a strong market. And if you're a homeowner right now, it is worth noting that you are in a market with low inventory and above average demand. So you still do have a great opportunity to sell your house in this market, and as I mentioned previously, I would love to list your home for sale if you do decide to sell. Though it must be said that anecdotally, I am seeing properties stay on the market longer than they were at the start of the year. I'm also seeing price reductions and below asking closing prices becoming a little bit more common. You have to be realistic about the state of the market and not list ahead of the market right now. Those sellers who still believe the market will bear any price that you throw at it are the ones with the homes that are staying on the market a little bit too long and the ones that are getting frustrated. If you're a buyer right now, it can still be pretty tough out there, but there is a silver lining to the high interest rates that we're seeing. We're beginning to see reduced competition as those high interest rates push the more casual buyers out of the market. Don't mistake what I'm saying though for an easy ride. It can still be very competitive, particularly for those most desirable homes, but you may have to make fewer offers than if you were shopping this time last year. Now I wanted to look at a few news articles that have stood out to me this month. If you're new to this channel, I like to do this section because numbers often don't tell the whole story. So I add in these articles to contribute further context, to dig deeper into subjects, and to look for perspectives that I hadn't considered. The first topic I wanted to look at in depth is inflation. As I mentioned earlier, I believe inflation is the elephant in the room when it comes to the US economy right now. And when it peaks and begins to come down, then I believe mortgage rates will come down on their own as well, which will be very positive for the overall housing market. So here is a newsletter exploring the subject from the real estate investment website Stessa. New data shows that inflation growth pace has slowed slightly, but we are still seeing record price increases not seen in 40 years. Consumer prices rose 8.3% in April year over year, a slight drop from 8.5% in March. So not a huge drop and only 1 month's data, but could we be at the peak in inflation? I certainly hope so. Economists do expect price increases to continue to ebb somewhat this year, because they think that consumer demand will taper off and that supply chain stresses will ease. The crucial question is how much and how quickly that moderation might happen. And here's an interesting point from the National Association of Home Builders. Higher interest rates will not produce more lumber. A smaller balance sheet will not increase the production of appliances and materials. In short, while the Fed can cool the demand side of the economy, additional output on the supply side is required in order to tame the growth in costs that we see in housing and other sectors of the economy. So some indications there from a couple of different sources that inflation is beginning to plateau. I sincerely hope that that is the case. And if inflation does come down, I will be very interested to see what it does to mortgage rates. Looking at the next article from Realtor.com. This article highlights the combination of higher home prices and higher mortgage rates, but does indicate that there is a silver lining to this, and that's what I want to focus on in this section. Though homeowners are putting up more for sale signs, the 1-2 punch of higher home prices and mortgage rates makes purchasing a home nearly impossible for many buyers on a tight budget. As a result, many are dropping out or putting their home buying plans on hold. That's good news for home shoppers that have the financial leeway to keep looking, since they might not have to contend with the heated bidding wars in the past few months. And with housing stock also projected to grow in the coming weeks compared with last year, buyers might face more choices as well as less competition. These trends together should bring more balance to the housing market that is expected to help cool the pace of price growth. If home shoppers can navigate higher housing costs, they should have more options to choose from in the near future and less competition from other aspiring home buyers. This isn't exactly positive news if you're a first-time home buyer or if you're only just qualified for a mortgage, but if you can afford to stay in the market, then you might reap the benefits of reduced competition. I note that when I purchased my property recently, I got the house at list price, which would have been pretty much unheard of only a few months ago. So there is definitely some accuracy to the point that this article is making. Lastly, I wanted to look at an interesting article that I got sent from Fidelity Investments. It's all too easy to focus on the here and now, especially when we've got headlines about raging inflation and really high mortgage rates. But it's still important sometimes to zoom out and take a longer term view of things. This is a very interesting article, and I will leave a link to it in the description, and I'd encourage you to check it out. It discusses the concept that our relationship with our homes has changed over the last couple of years. We no longer need to live near our offices, which is benefiting secondary and tertiary markets. We now need dedicated space in our homes to work, and we need greater access to technology in our homes. This has had major societal changes in terms of how we consume entertainment, how we date, how we learn, and even end-of-life decisions in terms of people deciding between staying in their homes longer versus moving into assisted living facilities. It's a great read, check it out if you have the time. Now let's try piece all this information together and summarize the market as we see it in June 2022. The big news is, of course, that mortgage rates are up, but they're holding steady in the mid-5s. Inflation seems to be peaking in the mid-8s. And home prices are expected to continue to climb. According to the National Association of Realtors chief economist, they're expected to climb 5% in 2022. And while more inventory does appear to be coming online, there is still a housing shortage. Sales are down here in Spokane, and we continue to see home price appreciation here in Spokane far above where we see it nationally. Inventory here in Spokane is approaching a 1-month supply, but is still pretty low. The playing field in the game of buyers versus sellers is beginning to level. We're still technically in a seller's market because we have historically low inventory, but buyers are beginning to push back against constant home price increases because of mortgage rate spikes and the inflationary pressures we're seeing in all aspects of our lives. That's it for this video. I hope you gained from this video. If you did, please like and subscribe. That really does help me out. And if you are looking at listing your Spokane home for sale, please consider me as your listing agent. Like I said, I can be very competitive in terms of commission rates. If you're looking at buying in this market, then please reach out to me. I would be honored to work with you. Like I said, my name is Phil Wells, and thank you for watching.